Good morning. Welcome back to the Retirement Report. I'm Hank Parrott. With me, my special guest and good friend, Dr. Friday of Dr. Friday's Tax and Financial Firm. Tax and Financial Services.
He just changes it, whatever it is. After this many years, I just let him slide.
Tax expert to small business owners and individuals, and yes, an enrolled agent. And that's an important part, by the way. If you do have tax trouble, and hopefully you don't, but for those that do, one of the things that can be so scary is just not knowing what to do. We want to just kind of, hide our head in the sand and hope they don't find us or something. And they're going to find us, okay? They're going to find you when you do those things. Don't try to do that. So here's what you can do. You go to Dr. Friday. She can help you. She can represent you in front of the IRS. And this is very important. You do not want to represent yourself in front of the IRS, right? It's remember that old adage they talk about in the old lawyer shows, right? He who's his own lawyer is his fool or something. I don't know.
Yeah. And
whatever it is,
really
it's a bad idea. I usually am, but that's one. So yeah, that's it. If you're going to represent yourself, you have a fool for a client. That's the thing. So we don't want to do that, right? We want to make sure that think of the anxiety levels that you might have to deal with there. So if you instead can go to Dr. Friday and she can be able to go and meet with the IRS on your behalf. You don't have to be there. Ooh, this is a good thing, okay? So, and she can get you out of that trouble, make those problems go away, help you negotiate a deal. I mean, there's lots of things people can do,
There's
right?
offer and compromises. We can make you non-collectible if they're coming after your Social Security and maybe that's all you have, or disability. We can work with removing liens off homes or just make you a payment plan that you can afford. The IRS is really more about compliance and then moving forward and dealing with the past than they are about just punishing. I know a lot of people think, oh, they're the punishers, but really they're just kind of the collection department of the U.S. Treasury. So just think of them as someone trying to do their job, and there are rules and regulations they have to follow, and they do have to follow those, but you need to know what they are so that you know what your rights are. And that's what we do. We represent you to make sure that you get the best service and best deals.
Keep the past in the past. Get rid of it. Don't be carrying it around. The future's got enough, right? We want to deal with the future stuff. We want to do planning to give you a nice future.
Well, that's it,
where you
because
can attain and maintain your standard of living.
I have a case right now where the person is, if they had come to me 3 years earlier, it would have been a very simple case. Parents passed away, very successful parents, left an inheritance. The IRS is now taking over $700,000 because they're getting every dollar, every penalty, everything else, which this thing could have been probably resolved for less than $100 and been on a payment plan and done with. They wouldn't have touched the inheritance. And we never know what the future is going to bring. But if I'm just saying the IRS is looking to resolve, but if they can, they're going to get everything they can. So now this person is looking to make a deal. Why would the IRS make a deal with you? You've got the money now.
Yeah, understand the IRS job is not to save you on taxes, it's to collect as much taxes as they can.
I mean, they're working for all of us. It's our tax dollars that you didn't pay. So they're looking at it from the other side of this thing, saying, I have all these millions of taxpayers that want responsibility. Why aren't we collecting all this back taxes? I had paid mine. Why aren't you paying yours? That's what they're saying. So, you need to really not let something like this slide, because things like this happen, and, you don't want to lose your entire future possibly because of some of the mistakes you made in the past.
And this is the other part when it comes to planning. When all the strategies that we're sharing with you today when it comes to taxes, and then there are so many more that we bring to bear with clients, understanding these are the things in the tax code that we're allowed to do. Of course, we're not going to be doing anything that's going to get us in trouble. That's the last thing.
Exactly.
But we are going to look at what these rules are so that people don't understand the rules, that they end up paying more in tax than they are required to do.
Right.
And why would you do that, right? Who would want to do that? Is there anyone that really wants to pay more in taxes than they're required to pay? I mean, it's enough that we pay what we're required to pay. I know when I look at that every year, how much goes into taxes,
yeah,
I'm
I can tell you,
oh.
He's not happy.
Oh my goodness, that's a lot of money.
He's not happy.
That's a lot of money. We don't like to do that, okay?
No.
But you got to do it. I like the services. I'm happy to, as Will Rogers said, I'm happy to be a tax-paying American. I could be just as happy for half as much, okay? If there's a way that we could reduce that down, I'm going to take advantage of every legal strategy, if you will, that's in the code that allows me to help me reduce my taxes, and that's what, when you look at the people out there that are, these wealthy people that spend, untold amounts of money to get good tax advice or good financial advice to help them maximize their dollars, and that means also, of course, reducing taxes. Well, guess what? Doesn't mean that just the wealthy. This applies to everyone.
Exactly.
Okay, you've got understanding brackets is one of the things. We got off on a little bit there, but let me get back to bring this back on the bracket part. So we talked about for a married couple over age 65, you're looking at over $20,000 between your standard deductions and your exemptions, okay? And that's if you're just taking standard deductions. If you're able to itemize, it could, of course, be even greater than that. Right. The next part is now when you look at once that 21, 22,000, whatever it is, once you hit that limit, the next part then is the 10% bracket. Okay, so for the 10%, the next 18.5, I think it is, about 18,500 is taxed at 10%.
Right.
So now think about that. A $20,000 no tax, okay, basically exactly almost $40,000, and my total tax on $40,000 is about $1,800. Okay?
20 times 10. Yeah, very good. Very good math.
I do numbers. I do numbers. So now then we start into the 15% bracket, okay? So now you're going, this is where we go up to, I think it's around 67,000, something like that. I don't know if I brought that. I don't know if I did. Anyway, it's around that 67. In fact, I can tell you, if we take the deduction, the standard deduction exemption, as I said, it's about 100,000. So if you take that off, then it puts us at right about close to 80,000, I think 78,000, something like that, right? 75.3. Thank you very much. No problem. 75,300 caps you out at the 15% bracket. Now that means after, right?
20.
So we've got the 23 or approximate between standard deduction and exemptions on that. So if you add the 23 to the 75, you basically got just under about $98,000 to $99,000 in income. Okay, and you're still in the 15% bracket. So if you have less than that, that's where we're talking about. We look for those channels between that approximate 100,000 and whatever you have in taxable income below that to do things like Roth conversion, stock, cashing out stock redemptions, if you will, mutual fund redemptions, things like that, and still stay in that 15% bracket, but clear those taxes out now so that later we don't have to worry about paying higher taxes on them. How many people, we ask this question a lot, right? How many people think your taxes are going to go down? What do you think, Clifton? Are your taxes going to go down? Absolutely not. Taxes are probably going to go up. And why are they going to go up? Because of the way our governments keep spending money more than what we're taking in taxes now.
Exactly.
So they have to go up if we just want to balance the budget, unless we can get a whole lot more taxpayers. How are we going to do that?
I'm not sure.
Jobs. We need lots of jobs.
That's not going to happen because now technology is going to take over for a lot of jobs.
Elections have consequences. Be thinking in terms of who's going to be able to create jobs. Really. Yes. One of the things we got, get on your congressmen, your senators. Both parties agree that we need to reduce the corporate tax rate. Right. And guess what? I can't remember exactly, but one wants it at around 15 to 18%. The other wants it at 10 to 12%, whatever. The bottom line is they can't come to a compromise and just split the difference, which would seem to be the easy thing to do. But even if they went with a higher number, it would work. That's the thing. It would work. And the money they're talking about, those trillions of dollars that are overseas that they, are trapped there because the taxes could come back in. Now, that money goes to work for the businesses.
We have to take another break,
unfortunately, so I can't continue this. But understanding how important that is. Businesses put it out there and grow their businesses. That means when they're growing their business, what are they doing? They're adding employees and jobs and more people that are working in jobs. What are they doing? They're paying taxes. Broaden the tax base, people. That's the easy one, right? All right, well, I got off my little soapbox. We'll take a break. When we come back, we'll see what more we can squeeze in for you this week. Join us here. We'll be right back on the Retirement Report.